let's get to gold here. So gold, I'm also looking for longs on this one. I am already in a long position on gold. I took a position on Friday. We're slightly in the red here. So, whoops. So went long on gold as we pulled back, got in on this pullback here. And my stop loss is around the 2370 level. So if we break the 2400 level and we can't come back from it, then I will take a loss on this one and move on from it. So I like gold to the upside. A couple reasons here. We'll stick mostly to the economic data for a second. So PMIs have been a big one for me on gold. We've seen the Purchasing Managers Index, both on the services and the manufacturing front in the US, showing signs of slowing in the economy. And we can show that data here. Let me give you a little bit more picture. Now, remember that generally speaking, slowdown in the economy is a positive thing for gold, as people might look to get out of traditional assets, maybe, whether it be stocks or bonds or whatever. They may be a little concerned about the state of the economy, and they want to maybe buy an alternative investment like gold, which is a big theme in the central banking world, where a lot of central banks have been buying gold aggressively, offloading their dollars in exchange for gold, which again drives the price higher on gold. That's been a theme this year for sure, especially the Chinese central bank buying a lot of physical gold. So PMIs here, this is the services PMI number. And what we can see here is that above 50 is considered growth in the economy as expected, whereas a number below is a decline expected in the economy. And we can see that last time around, the red dot showed that the market was expecting a positive growth forecast for the services PMI data. And so what we actually got was on July 3rd, we got a reading of 48.8. So it came out light. And this is a little bit, actually, there was a huge move on this day. Gold really jumped on this day because, again, expectations for cooling in the economy are going to give you a little bit of concern on that front. And it led to some buying of gold, also some weakness in the dollar, right? That's kind of, they go hand in hand. Manufacturing PMI, let's take a look at this, has been below the 50 level for some time here. In fact, it briefly crossed above 50, but we've stayed in kind of a slow period for manufacturing growth for some time. So again, weakness in the dollar from this, and that also is bullish for gold. So it's reflecting in our top setups algorithm here. You can see positive pointage for gold. I don't think that's a word, pointage, but anyways, gold is getting a bullish reading overall. I liked the pullback on Friday, so I went long, stops below, and we'll see how that one goes. But if I stop out of it, then I'll, similar to the NASDAQ, I'm gold is something I'm bullish on overall this year. I probably won't be shorting gold unless something drastic changes. Perhaps if we see interest rates expected to go up, if inflation kicks up, the economy, rips higher and we need to, raise rates again, that's a different story. But I don't think that is happening this year. And I think that that's pretty far-fetched. So for the most part, I'm going to stay on the bullish side of gold, thinking that rates could come down, which is the primary driver of gold that I see is interest rates. And I think interest rates are going down. So that's my opinion. I could be right about that, I could be wrong about that, but I like gold to the upside for that reason. So let's finish the watch list here. If we take a look at the Russell for a moment, this is another one that I'm really interested in. Actually really interested in, especially, and again, I have to keep coming back to this concept, but I'm really not thrilled to do so. If Donald Trump wins, the tariff situation is interesting. Frank actually just stepped in my office before we went live streaming, and we discussed this. The tariffs favor domestic companies in the US. So what does that mean? Well, tariffs on companies, that export largely, like huge companies in the US, they're going to probably be met with reciprocal tariffs from other places, which may make American goods more expensive in other places. And if the dollar gets strong, they could also become more expensive. That being said, tariffs on imports make imports more expensive. So let's say this is USA, right? There's Florida, there's Maine, beautiful state, by the way. California goes like this, Texas goes like this. there's the US. Beautiful, right? I think that's pretty spot on. The East Coast just expanded way out into the ocean. Anyways, this is the US, and goods are coming into the US, right? Goods are coming into the US here, probably a lot more over here. And then there's Chinese goods that go through the Panama Canal, and then they go to Florida. Anyways, you have all these imports, right? If there's businesses, let's just say that we apply a 10% tariff to all these imports, right? If all of these things have import costs added onto them, then suddenly domestic companies in the US, right? Let's say, I know these are houses, but let's pretend they're businesses. Suddenly they actually look more attractive because now domestic manufacturing and companies that can provide those services or products in the country might get a boost in revenue because now they're more competitive with these imports because the cost is going up. So my point with sharing that is the Russell is a lot of domestic companies. The Russell is not as international as, say, the S&P 500 or the NASDAQ is. So I actually really like the Russell in this situation that we do see Trump being elected. Does that make sense? Again, I have to be so careful when I talk about these topics because I know a lot of people don't like Trump, a lot of people don't like Biden, a lot of people don't like Kamala Harris. I get it. Everybody's so up in arms about, so-and-so. But I'm trying to navigate this topic carefully because it is very important to financial markets.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I'm watching you.
Oh,
to the YouTube channel. I'm like,
and how's it going?
What did you do? Did you buy NASDAQ?
I did. I bought the NASDAQ. I went all in on your account too. I actually logged into your account when you were sleeping, and I bought the NASDAQ all in. So I hope you don't mind.
I love that. That's great.
Anyways, I bought the NASDAQ.
Yeah.
So we'll see what happens, but kind of a big move up here today after a big slide last week. So we'll see if it can continue to the upside or not. I saw a little bit of your Sunday video here, Eivind. I watched some of it last night, and I'm curious your thoughts on some things here. In terms of the dollar, I think you mentioned like maybe we see some short-term bullishness for the dollar, and is that right?
Yeah.
Can you break that down for us again?
First of all, I didn't know that you did account management, but there we are. The reason
just to get that out there, I don't manage anybody's money.
the reason is was at least in my head would be higher chance of Trump being the winner chicken dinner. And he is pro stimulus, which is probably going to keep inflation going higher. So this political risk that he carries naturally, like a natural aura of him. So that's kind of the reason. And then technically, we went below 104, back above 104. So we have done a trend of set 200 pips or something, and then that's kind of a normal move for me. And then I'm expecting kind of a range during the summer. So 200 pips down, 250 pips down. Sorry, is good enough for starting expecting a pullback or return back up.
Yeah. I mean that's. So I was going to say the interesting thing about the dollar is that we've had a really big move lower without much of a pullback in terms of a bullish move. You had these tiny little bullish swings, but on my video as well on Sunday, I think for me, I'm fine with a pullback in the dollar, still being overall bearish but thinking that we could see a pullback up into like this 105 level. The way we kind of false breakout there below could lead to a little bit more of a push up into this zone here. My theory, though, is that still we overall see the dollar lower this year. One of the themes also of Trump's policies is actually a bit of a weaker dollar to make exports more competitive. That being said, the market is like, those tariffs could be very inflationary. So that would drive the Fed to maybe need to keep interest rates higher for longer. So maybe the dollar goes up. So I'm kind of conflicted on the dollar. It's a little bit tricky for me, but regardless of the president, I think the economic data, I don't want to lose sight of what really is important here overall, which is, do we continue to see inflation coming down in a trending way? And do we see jobs data stay, lax, not awful, not too hot, but somewhere kind of soft? Do you agree, or is it really all about the president trade right now?
You brought something up that was very interesting. Why would America bring down the dollar to increase exports? Well, it kind of makes sense, but it doesn't, because 75% of the GDP is domestic. Like, they are self-sufficient. And of course, it's probably a bit better if they can get like lower, cheaper products from China instead of buying it at 10x by US manufacturers. Okay, maybe. Or you can get lower car prices because of its lower manufacturing from Mexico. Maybe. But unlike what also, I don't know. It's kind of like, I'm just trying to find an analogy here. It's kind of like trying to build a bridge over the water instead of just take away the water, like just drain the pond or something. I don't know. Like it feels like you're trying. Yeah, it's the wrong use of money. Sorry.
No, I mean I see what you're saying. It's a weird one, but it's a unique strategy that it does seem
it
like
will make sense for Canada, Australia, Europe, China, New Zealand.
That's fair.
Like if you are,
because they're more exporter-based economies, right?
Yeah.
Is like what you're saying. Okay, yeah.
Yeah.
Maybe the concept, maybe the theory at least is raise, manufacturing in the U.S. as well as exports in the U.S. We do have a pretty terrible trade deficit overall in the U.S. So maybe that's something that's the theme. I'm not sure. I'm not again, I'm not in government, so I'm not calling the shots by any means. But in terms of the markets, I think you made a good point about the tariffs are rightly so a concern on the inflation front, because anytime you mess around, we saw Eivind in 2022 how supply getting messed up can be so inflationary. Remember, in 2022, I was talking about this shortly before you joined the stream. Here's oil prices, and oil prices. I know this is a different catalyst, but we saw oil prices rising dramatically, and then really rising dramatically during the Ukraine and Russian kind of outbreak, where supply got hurt. When you introduce tariffs, the one concern that I have, and many market participants have, is that is another supply disruption to a degree that could be very inflationary, and we've seen how painful inflation can be. Now, I'm not saying that it's right or wrong. I'm just saying it's fair for the market to at least be like, how is this going to work out, or is this going to be bad? So, with an increased likelihood that Trump is the president next, I think the market is right to be a little concerned about that. That being said, also, Eivind, while we're on the subject of oil, the administration that Trump wants to run is probably going to pump a lot of oil, just like Biden has pumped a lot of oil. So oil prices are down today.
Yeah. Also, one other thing though that you can add to this is when you increase tariffs, you are hurting someone's business, either on your side or on the other side. So that is a risk of. Remember, Trump went to trade war with China.
Yes.
I can't remember the exact outcome of it, but it wasn't necessarily positive for everyone.
No, 2018 was a pretty rough pretty rough trading year. I'm just pulling it up while you're talking about it, just for reference. Here's 2018. We saw this was the major concerns around the trade war that Trump had going on with China at the time. So
it significantly increased the dollar, significantly increased the risk of the environment that we're in. So that's one of the points when I say there's a risk premium to Trump's aura, no matter if you like him or not. To the markets, he represents a bit of instability for the greater good of American people or American economy, but for everything else of status quo, it is a change. So you have the trade wars, you have the tweets, you have the meeting with Kim Jong-un, is that what this guy called nowadays? The North Korean guy?
Yep.
Try to bring peace at least. So, and then he said he wants to pull out of NATO. Okay. And he said that later on as well, like lately. So, risk off is kind of the game and the name of him, to be honest.
Another thing too, Ivan, to think about with the oil price specifically is the fall in oil prices could also be that the campaign that they're running is very focused on ending wars, right? So if wars end, could that be a bearish thing for gold and oil? And again, I'm not everybody wants wars to end. I'm not saying that that's like specific to one side or the other, but the fashion in which they try to end it is differently. And I think at least in the campaign process, Trump's been pretty aggressive on wanting to end things between Ukraine and Russia and all that stuff. So if wars end, the concern, the risk premium that's in oil and in gold could see some downside. Now, I still think gold is bullish on a different front, but at least on oil, maybe that's another component to why oil's down today.
Yeah, I also think there is a larger component to it if you want to do oil by itself. Sorry, I'm on the wrong chart here. The stimulus that China has imposed has not proven to be good enough. So the economy is not doing the greatest. You have falling inflation across all G7, 8, 9, 10 countries, which is definitely going to harm demand. So for oil to be lower today is kind of, in my view, a more realization or kind of reality check for the market, because as far as I know, that we still have supply cuts from Saudi Arabia at around 500 million barrels per day or something in that direction. So it makes a lot of sense. What didn't make sense, what was the rise from 72 to 9 to 84. That one I couldn't explain, but I can explain the fall.
Yeah, it's interesting stuff. I mean, stock market up today, except for the Russell, which is down. Perhaps this is a bit of a, well, I would have thought that if inflation concerns were really ramping up, you would have seen yields going up today, but we don't really see yields going up. The dollar's not up, very much today. So, kind of an interesting day. You also see the VIX down 4%. And I think that, whether it was regardless of who, what, not because it's Trump, but because the market now thinks that there's like a really solid chance of a specific person winning the election. And they have that question kind of more answered. That might be why volatility is down here today, whether it was Biden or Trump or whatever. Like if the market just has someone that they can say like, okay, this is kind of who we're going to be dealing with. If they know that rather than being unknown, kind of is another bullish thing. Like it was almost like when Biden became the president and it's like, okay, the election is behind us. The markets went up because now they're like, okay, we know what we're dealing with now. There's not that uncertainty of who's going to be the president. So I do think that, VIX futures have actually been forecasting for the VIX to remain elevated for a lot of the rest of the year as we determine who the next president is going to be. Because there's a lot of, as you mentioned earlier, there's a lot of uncertainty in regime shift or whether or not it's going to stay the same or not. So It's hard to avoid the the topic because it is so pressing to the markets, but I do keep coming back to kind of the overall bigger picture, which I still think is very largely dependent on the economic data. We do have some stuff coming up here pretty soon, Eivind, in terms of economic data, right? Do you know off the top of your head what's coming?
Which country?
Primarily US, just because we're talking election stuff.
PCE on Friday.
Yep, that's right. PCE.
GDP on Thursday.
Yep, advanced. Oh, this actually could be pretty market moving. Advanced GDP is always the big one of the three GDP types. We've got the week after that, I think, is a big one. Yeah, we have Fed funds rate, the Fed meeting on next Wednesday. And we have the big one for August, or one of the big ones for August, which is the NFP event, August 2nd. So a lot of economic data still coming in. And, you know, just while we're on the topic here, we have something else that is really more important, I think, than anything else if you're someone who's watching the indices. And that is earnings this week start to really kick up. On Tuesday, we have Google, Tesla, and Visa. And Coca-Cola, which I like myself, Coca-Cola, so I'll be watching that one. But you have a lot of big companies starting to report their earnings too, and this is really, really important as well to at least the stock market side. Would you agree?
Yeah. Does Buffett own shares in Visa?
I think he does. Actually, I don't know if he does or not. I think he does.
He does in
Buffett.
Coca-Cola, he knows he has been a long-time investor there, but because in that kind of environment of you just have what do you call it? You have stocks that just will grow forever or keep giving returns. You know, those solid legacy companies that just goes and goes and goes. Same thing. So for Visa would also be in that category, but I don't know about their fundamentals. But generally speaking,
yeah. So I see it being a pretty big week on the earnings front. You've got Google. Let's see, what else? Do we have anything else big this week? I think we kind of kick it off light with just Tuesday being a really big day with Google and Tesla. Both of those pretty important market sentiment drivers. And this is the thing about this market is if you're somebody who's watching the S&P 500, it is either going to look very expensive or very well priced by the end of earnings season. That's the thing is, you know, if the earnings match the price tag, then it's okay. But if the earnings don't, that's where you get into murky waters. So we'll see on that front. Eivind, what else are you watching? Do you have any other setups or ideas?
I'm watching chat. I just wanna mention two things. China is important for Australia because China is buying iron ore or products from Australia, so it's their biggest buyer. So when China does bad, Australia does bad. And is Australian dollar moving lower because of China decreasing their interest rate by 25%? I don't know if they have, and if they have, then yeah, that would not necessarily be great for Australian dollar, as well as Australian dollar was at least very bullish at some point, but now it's very, very, very bearish, and I've not been able to trade it. But it's a good technical turnaround, but I'm opposite, so I'm just waiting for this one to fall and then it can go back up again. Am I looking at any trades? I like Swiss pairs going lower, but those Swiss pairs that is lower is very lower, and then dollar Swiss. I said yesterday I want to look at it. I'm still wanting to look at it. I just don't have the confidence at the moment. Like, what is this? It's supposed to do that and then that, not range. So that is one, and then the other ones are the New Zealand's. I really want them to have deep pullbacks. Isn't happening, mate.
Yeah, the Kiwi has been really, really weak recently.
Yes.
Even against the dollar here, it's been just selling off heavily. And Yeah, that's been a tough one to try and catch pullbacks on recently. So I thought you did have a position on it. Did you not have a position
I
on it?
closed to take profit.
Okay.
We can.
Nice.
It's in the Discord. But yeah, I closed out at 80.89, I think, maybe. Somewhere in that
Very
direction.
nice. Very nice. Anything else that you're?
But you stayed in it, didn't you?
I'm still in dollar Swiss. Yes, I'm in.
Yeah.
I have. I've been looking for, similar to you with this one, if I can get a break lower through that previous low, I'd be happy to trail stops and put in kind of a further locked in profit. If we could show my screen for just a second, I'll show you. So if we can see, move like this, if we see a break and take out the lows, that would be a bit more confident that that'd be a nice lower high in which I could trail my stop. So if it doesn't, though, I run the risk here, and I fully accept that this could happen, that we could see a reversal off this level, and then I would be taken out for a very small profit. But I like the overall downtrend on the dollar, so I'm willing to kind of stay loose on this, and I would just like to see, if we can, a break through the lows. That would be my signal to trail stops further. So we'll see.
Yeah. Okay. I'm a bit, I want it to. I'm just around charts, but I want it to break. Okay, now since it's not. Oops. That was not the one that I was supposed to do. But it needs to break that low there, and then I can look for another one. Because currently, it looks that direction at the moment. So, yeah.
Yeah, I'd like to see that this little bullish move kind of fizzle out and roll over. If it doesn't, then I might get taken out of the trade.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.